But as we move into this new challenging time, cash will continue to be king because you're also able to make a move immediately on those price deductions and not having to worry about the inflated mortgage rates at this point. So basically more of the same there, but again, a rebalancing of the market overall.
There is a lot of confusion about the housing market right now. Tell us what direction we're moving in, if it's possible to determine that. I know we're in a period of transition. The question is, where is that transition leading?
Sure. So the key term right now is rebalancing. We have seen an extreme seller's market over the last 2 years. It's been a vicious hunt for buyers, bidding wars, cash only offers being accepted, getting rid of all contingencies, no inspection. It's been super, super difficult on the buy side. So right now we're rebalancing as a result of those rate changes that we've seen take effect over the last few months. We had a 50 basis point increase a few months ago, and then just the recent 75 basis point hike. Now, those do not have an immediate effect. You'll see prices start to decrease, but you really see a 2 to 3 month lag period between the rate hikes and when you see a pullback on prices. So right now, most sellers are starting to get more realistic, and most buyers are just sitting on their hands trying to lock in a current rate before they increase further, but not feeling that sense of urgency that they did 6 months ago to make a decision immediately.
So is this the transition beginning to favor buyers? Do you expect that trend to increase and at the expense of sellers?
Right now, I don't know if it's going to necessarily favor buyers, but I do think it's going to rebalance to a more even market. We'll see what is in store for the economy over the next 3 to 6 to 12 months. And if things get worse, if inflation gets increasingly worse, or if it stays at 9% in perpetuity and we don't see any type of easing there, then I would expect it to become a buyer's market. But for right now, we're just rebalancing to center.
Owning a house is a good thing in the midst of inflation, is it not?
Yes, and if you look at the history of, home prices relative to inflation ever since the 70s, we have really seen that trajectory of home prices outpace that of inflation extremely by 10, 5, 15%, depending on the area of the country that you're in. So building wealth for most Americans has really come as a result of owning property, of owning their home. And because the mortgage, owning a home and having a mortgage is basically a forced savings plan, it's been very advantageous for those who were able to build up equity in their homes and then trade into new properties over the last year and really see that appreciation grow exponentially. Now, cash is always king, and we saw the bidding wars and the cash-only offers to the nth degree, to the extreme over the last 2 years. But as we move into this new challenging time, cash will continue to be king because you're also able to make a move immediately on those price deductions and not having to worry about the inflated mortgage rates at this point. So basically more of the same there, but again, a rebalancing of the market overall.
We also saw over the past couple of years a new change, that being young people were beginning to step into the housing market, whereas they had not been previous to that. Do you expect that to continue?
Yes, the millennial generation finally decided to get into the housing market, whereas we saw them renting or even living at home with their parents well into their 30s. This is an exciting time for millennials, a particularly challenging time. And I feel like they have been hit with the 1-2 punch, getting out of college in approximately 2008, going into the first crisis, and now buying their first homes and starting families on the precipice of the next crisis. So millennials have had a tough time, but it's good to see that they are not credit card dependent, because I think that's one of the things that we haven't been talking about as much, is this switch from a savings economy over the last year into the pandemic, and now we're starting to see credit card bills and non-payment on car loans and that type of thing. We're starting to see that resurface. So paying down that bad debt and then making sure that you're also involved in that home ownership property ownership is super important for millennials as they embark on the next generation and the next stage of their life.
I wonder if millennials are drawn to home ownership in part because renting a place has gotten increasingly expensive as well.
Sure. Renting, especially here in New York City, we have surpassed the $4,000 an average per month mark for a one-bedroom apartment in Manhattan. So it is extremely expensive to rent, and that's for a couple reasons. It's because the cost to landlords over the pandemic was extreme, where you had a lot of non-payment of rent and they're trying to make up for lost time. And then also it's so difficult to enter the ownership market now because of that initial 20% that you need to put down for your mortgage in a time of inflation is even more difficult to come by. So you're kind of hit between a rock and a hard place at this point in terms of trying to buy a home and then also trying to be involved in the rental market. So we see places like Miami. Miami has gone through the roof in terms of cost to rent more so than anything else. And that's because you have an immediate influx of people that just want to live there.
And Miami, obviously in the state of Florida, where the housing market was incredibly hot as people were fleeing the lockdown states, moving to the non-lockdown states, Texas, another state which profited very much from the transition of the blue wave moving to the red states. Is that still continuing? Are those still the hot housing markets in the country? And do you expect that to change?
Yes, I think that Florida is here to stay. There are a lot of doubters that said, oh, as soon as you hit the summer months when it's really hot down there, people are all going to trickle back up north. But I think at this point, people have really grounded themselves in Florida and in Texas, Arizona, Nevada, Tennessee, all of those hot markets, and they have become real residents. Their kids are enrolled in school and they are there to stay. Now, I think that a lot of those individuals also maintain the pied-à-terres in the cities where their jobs are located. And we're also seeing a rebalancing of the work from home versus going into the office model. And I think we're going to end up somewhere in the middle there. But, you have a ton of wealth management companies that are opening between Miami and West Palm Beach. And that's real money continuing to flow into Florida.
We know that the Fed has continued to signal that the interest rates will rise in the coming year. What kind of assurance can you give young people who are looking to get into home ownership and anybody looking to get into home ownership in the face of those rising interest rates and higher mortgages?
Well, I think it's super important to lock your rate as soon as possible. You buy yourself 30 to 60 days, talk to your lender, literally get on the phone with them today and make sure that you have an expectation of what that rate will be. Otherwise, if the Fed does decide to do another half or 75 basis point hike, you could be looking at an extra $500, $1,000, $2,000 per month on that same mortgage. So we will see properties start to pull down in terms of their pricing, and that makes it also easier to get together that initial 20% down payment because you're working off of a lower basis. However, it really comes down to monthly payments and how much you can afford to spend.
So it sounds like now is the time to act. Erin Sykes, Chief Economist for Nest Seekers International. Thank you so much for your time.
Thank you.
Hi, I'm Doug McKelway, and thank you for watching Centerpoint. We hope you enjoyed this video. Make sure you hit the subscribe button and tap the bell icon so you're notified every time a new video is posted. Leave a comment below and keep the conversation going by sharing this video with a friend who needs to see it. Thanks for watching. We'll see you back here tomorrow.